In a crisis, assets don't protect you. They become the first thing you sell. Right now, the world is watching a paradox. Missiles are hitting gas fields. Crude oil has breached $100. Markets are bleeding. And yet, gold, the ultimate safe haven, is falling, down 11% in a single week. Your entire life, you've been told that when the world is afraid, gold goes up. But you are watching it defy the story. To understand why, you must understand the difference between risk and chaos. When investors see risk, like inflation or a weak currency, they buy gold. It's a strategic swap of paper for metal. But chaos is different. Chaos is when nations move from strategy to survival. When a country needs to feed its population, finance a war, or secure energy shipments, gold stops being a hedge. It becomes emergency collateral. Think of it like a man selling his last watch to keep the lights on. He isn't selling because he lost faith in the watch. He's selling because he is a forced seller. Nations are currently instructing bullion banks to dump gold into the market to get US dollars because the most important commodity in the world is oil, and oil still speaks the language of the dollar. The loop is lethal. War creates an oil shock. Oil shocks create massive demand for dollars. Countries sell gold to get those dollars. Gold drops, the dollar strengthens, and the cycle tightens. The U.S., already a major oil exporter, is now selling expensive energy into a world where gold is temporarily cheap, a masterclass in structural leverage. While the majority panics, one player is moving in silence. The People's Bank of China has been increasing its gold reserves for 16 straight months. In February 2026 alone, they added 30,000 ounces. They aren't watching the weekly charts. They are watching the collapse of an era, using this chaos to quietly accumulate real assets, while retail capital buys the dip and sells in a panic 2 days later. If you wait for a market move to make sense, you've already missed the exit. This pullback doesn't make sense because it isn't driven by logic. It's driven by a liquidity squeeze. Gold hasn't failed. It is simply doing its job as the world's ultimate collateral. Two types of capital exist in every crisis: capital that moves on panic, fast, visible, and always on the wrong side of the trade, and capital that moves on structure, slow, invisible, and already positioned before the dust settles. The loop always resolves the same way. The only variable is which side of it you're on.